Hey traders and investors, it's Serge Berger here. Today we're going to have a look at Facebook. I've been getting a lot of questions about Facebook asking me whether the stock is done going up here for an extended period of time, and I have a very straightforward method of having a look at that. First of all, let's talk about sort of supply and demand. We have a lot of new tech and mobile internet-based businesses coming out in terms of IPOs here in the coming couple of weeks and months. Of course, today we had Candy Crush come out, so we have Box coming out in the future, we have Alibaba coming out. So there's a lot of things in the supply, in the pipeline, and that's going to create naturally a little bit of distractions away from some of the existing, you know, internet type of plays, new internet type of plays, social media stocks like Facebook. It's going to take attention away from there, but also it's going to maybe to potentially take a little bit of demand out of there. It's a natural supply and demand situation there. You hear very few people talking about that, but I'll tell you that's basically part of the reason why Facebook is coming a little bit under pressure. So through that lens, Facebook is doing what it should be doing, which is going a little bit lower. At the same time, if you look at some basic momentum oscillators, and if you don't see this too well, you can just kind of listen to my words. But basically, momentum oscillators are good for one thing, but I wouldn't never ever really base a trade around them solely. So if you look at the relative strength index, I tend to use them using divergence. So if I see negative divergence, i.e. price going one way and momentum going the other way, in which has been the case in the RSI since last July, I set up and take notice. At the same time, we have to understand that doesn't really work for a lot of these kind of momentum stocks like a Facebook because there's different dynamics in it. At the same time, at some point we do have to take notice, and that's really usually when price starts to curve down. So from that point of view, there certainly is plenty of room lower in Facebook now that price is actually finally catching up with what momentum has been telling us for many months. At the same time, stochastics in the near term are immediate term oversold, so that's good to know. Again, I would never base a trade around that, but that's nice to know for right now. If we go and have a little bit of a closer look at Facebook, we see that one of the great momentum type of indicators in the sense of moving averages that I like to use is the 8 and 21-day moving average. I talk about to my subscribers and direct clients about this every day. A momentum stock like Facebook that's active, that bounces around, but is technically a respectable stock, needs more than a 50 or 100-day moving average. So I tend to measure my near-term sentiment or momentum in the stock more with 8 and 21-day moving average. So at the very moment, you can see both of those moving averages are pointing down. In fact, we had the 8-day cross below the 21-day here just a few days ago. And from that point of view, there's just really no reason to buy the stock. If I was long the stock, I certainly would have sold it here when that happened a few days ago. If I want to go in and buy the stock, I just don't see any reason to buy it just yet. You need price confirmation in a stock like Facebook. If you look at Facebook, even just a couple months back, there was plenty of opportunities where you didn't have to try to catch a falling knife. You could have gone in and looked for opportunities where there's clearly defined candlesticks, up gaps, momentum support at various moving averages, things like that I always discuss with my subscribers. So I hope this makes sense. I don't think Facebook is completely falling apart. I wouldn't try to catch a falling knife here just yet, though. Hope this makes sense. Any questions? Please shoot me a message on Twitter at my Twitter handle, which is SteadyTrader. Take care.